Hi everyone, welcome back to a brand new episode of Marcus. Today we're looking at Coca-Cola, ticker symbol KO. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and the technical aspect of the stock. Should we be buying Coca-Cola? Well, let's take a look. So Coca-Cola is traded on New York Stock Exchange and are in the manufacturing sector. Their market capitalization coming in at $245 billion and the revenues at $41.3 billion. PE ratio is at 25. That is a bit high for me, so that is a no. Profit margin above 15%. I like that. Price to sales ratio coming in too high, which is a no, and the price to book value is too high. So basically, Coca-Cola at its current state is overvalued. I do like the fact that they do pay a dividends of $1.72, which is a plus, and the effective return is at 3%. I like that. Return on equity is at 39%. I like that, and return on assets is a bit low. That is a no for me. So the stock is currently traded at $56 per share. If we go down, we can see that we are below the 50 and the 200-day moving average. Basically, that indicates that we might see the stock price decline, and we can see at today the stock is currently trading higher and higher. We are down 0.7%, but we are seeing that the stock price is moving higher. But if we look at the 1 year chart, we can see that we have been moving in a positive trend line for quite some time, but has lately seen a more consolidation and now moving within a negative trend line. But we'll take a closer look at the technical aspect further down. But let's head over to the income statement. What we can see here is that the total revenue went from 36.2 billion up to 38.7. We can see here we fell off 1 year, improved, and then fell off again, and then recovered. So a bit of fluctuation here. I don't like fluctuation, but seeing that these numbers are improving, that is a plus. Gross profit went from $22.5 billion down to $23.3 billion, and we can see here that we fell off again, improved, fell off, and improved again. But overall, looking at over the past 5 years, we're lower than what we used to be. That is negative. Net income went from 1.2 billion up to 9.8 billion. We can see how these numbers have been improving, fell off in 2020, but overall trend is positive. Now let's head over to the balance sheet. We are interested in the current assets versus the current liabilities, and we can see that there is a huge difference between the current assets and the current liabilities. Basically, if they were to convert these assets to cash, they're able to pay off the current liabilities, and that is a plus. But they are far from being able to pay off the total liabilities, and we can see here that it went from 70 billion down to 66, which is great, and then it grew a bit and has been growing ever since, and that is negative. I would like to see them start reducing the overall debt. Outstanding shares went from 4.3 and landed at 4.3, basically unchanged. And we can see here they did issue shares here, but then did buybacks down to 4.3 billion shares, and this is negative. I would like to see a company at this size start doing buybacks, because whenever you see companies issuing shares, that basically is telling you that they are diluting their investors. But seeing that these numbers are unchanged, that is negative. Now let's head over to the cash flow. What we're interested in here is that the operating cash flow versus the capital expenditure. We can see there is a huge difference between the operating cash flow and the capital expenditure, which is a plus. And we can see the operating cash flow went from 7 billion up to 12.6, and these numbers have been improving. Fell off a bit here, but then recovered, so that is a plus. Capital expenditure went from 1.7 down to 1.3, then up again, and then down again. So we're seeing a fluctuation here, but I would like to see them continue to invest in the business. Sure, they are investing in the business, but it's not a steady growth here, so that is negative. Now let's head over to the key figures. So what we can see here is that the earnings per share went from 0.9 up to $2.2 per share, and these numbers have been improving. Fell off a bit in 2020, but overall trend positive. Revenue per share went from $8.4 per share up to 8.9. We can see we fell off and improved, and then fell off again. As we can tell, a bit of fluctuation here, but overall trend is positive. Equity per share went from $4 per share up to $5.32, and we fell off here, and then we started improving ever since. So that is a plus. Dividend per share went from $1.48 down to 39 cents, and then have seen better and better numbers. That is great because I like those recurrent income, and also I like when the company increases the dividends. So that is a plus. Dividend payout share 506%, too high. This is I don't like this at all. I like companies that pays out less than 60% because I want some of the capital to remain in their business for investments, acquisitions, or just overall strengthening their finances. And seeing that they're above 60%, that is a no. I don't like that at all. Gross margin went from 62% down to 60%, and we can see here it is ranging between 60 and 62%. And I would like to see. Sure, these are great numbers. Gross margin of 60%, that is great, but that tells us that the cost of goods sold is at 30%. I would like to see them start trying to be more efficient and having a more stable development, because fluctuation is not good for us investors. We need predictable businesses that we know and can understand and study well and can predict the future. By seeing uncertainty, that is not good for investors. But these are great numbers, and we need to compare this across the industry and see how Coca-Cola is doing compared to their competitors. Operating margin went from 18.9% up to 32%. Great development here. We see 23%, 28, 29. So this is just improving. They are reducing their operational cost and having better and better numbers. So that is a plus. Profit margin came in at 3.4% up to 25%. And these numbers have been improving year by year. We fell off a bit in 2020. Overall trend is plus. Return on equity went from 7.3% up to 42.4%. And these numbers have been improving. Fell off a bit here. Overall trend is positive, and return on asset went from 1.4%, and these numbers have been improving. Same thing here, we fell off in 2020. Overall trend is positive, even though these numbers are quite low, but I still liking the numbers. So solidity tells you about a company's financial strength for the long term, and here we went from 19.4% up to 24.3%, and these numbers have been improving year by year. That is a plus. Balance sheet liquidity tells you about the company's financial strength for the short term. Here we went from 0.8 down to 0.4, and these numbers have been dropping year by year. That is negative. They need to work on this. Debt ratio went from 4 down to 3, and we can see here these numbers have been dropping. That is great. That is a plus. Basically in 2021 with a debt ratio of 3, that basically is saying that they have 3 times more debt than equity in the business, and seeing that these numbers are dropping, that is great. So guys, we have gone through the income statement, balance sheet, cash flow, key figures. Now over to our key features, which is the stock analyzer. And what it does is that it gives you a simplified, holistic overview of the company's performance. We can see right away here that the PE ratio is above 20, which is negative. The company do pay out a dividends, which is a plus, but the payout share is greater than 60%. That is negative. And the dividends have increased over the past 5 years. That is a plus, but the number of outstanding shares have increased or been unchanged. That is negative. Revenue increased over the past 5 years. That is a plus. Profit margin above 15%. Plus profit increased over the past 5 years. That is a plus. And the current assets are greater than current liabilities. That is a plus. Solidity have improved. That is a plus. Balance sheet liquidity have decreased. That is negative. And the debt equity ratio have improved over the past 5 years. That is a plus. And the total liabilities have grown over the past 5 years. That is negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. And you can have this software along with everything we've gone through, plus access to a discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to head over to commerce.sc and become a member today and support the channel. Okay, thank you. But now let's take a look at the guys, here we have the chart. As you guys can clearly see, let me lay down some line here. We can see that we have been moving within a positive trend line for many years, and but has recently broke below that support line. We can also see, if we look at the historical, we can see that we have been, this support line have held for a couple of times, and every time we reach these levels, we see buyers come in and push the stock price even higher. But due to the economic circumstances, we saw here that the stock price broke below this area, and I think that we might see something like this. That now that we broke below that we might see this stock price try to recover back to the now the resistance line, and this will be a critical moment, critical space to watch, because we could either see the stock price go back above the resistance line and become a support line, or we might see the stock price go back down. And if he does go back down and go and move below this area, then we know for sure that we might see a continued decline of the stock price. But we'll just have to wait and see how the financial markets develops, and with the interest rates going on around the world. But looking at the overall company and their performance, Coca-Cola is a great company and has been around for many years and will be around for many, many more years. But going forward, what I would like to see is that they try to improve their operating margins. Even though it's a great numbers, we're seeing the gross margins. The operating margin is great. The gross margins have more or less stagnated. It's ranging between 60 and 62%. I would like to see a more stable development. There is a lot of fluctuation in the business right now, and I would also like to see that they reduce their dividend payout share at least down to 20 to 40%, so that they keep some of the capital in the business and can use it to do stock buybacks, or start reducing their total liabilities, or just have that capital for investments, acquisitions, or just strengthen their finances. I think that would attract a lot of investors. So are you buying or holding Coca-Cola, or are you maybe selling? So what's your stand on the company? I would like to hear your thoughts. So guys, that's all I have for this episode. I truly hope you enjoyed this one. If you have, please give me a thumbs up, comment, and subscribe. If you have a stock you want me to do a video on, please leave that in the comment sections below, and I'll try to do a video on that. And as always, guys, if you enjoyed this one, I hope you'll stick around for more, and I'll hope to see you on the next one. Okay, take care. Bye bye.